Hi guys, so welcome to today's session with Boss Your Numbers. In our last video we looked at the double entry system and the acronym DEDCLIC and how we can use this to do our debit and credit in the different type of accounts. So today we're going to use the DEDCLIC acronym and look at a few examples of transactions and how we can do the debit and credit for these transactions. So let's begin. The first one, I've got invested cash into the business for £10,000. Therefore, the business has received cash and also owes capital back to the owner. So I'm going to increase the cash in the business and increase capital. And to do that, I'm going to therefore debit my asset, so cash is an asset, and credit capital. So debit cash and credit capital for £10,000. Next one, bought a machine on credit from A for a cost of £8,000. So I've bought a machine and that's an asset for the business. So that's going to increase the asset. So debit machine for £8,000. The fact that the business has bought it on credit from A, this means the business owes A, and that's a liability. I'm going to increase my liability, and to do that, I'm going to credit. And we use the trade payable account, also known as the trade creditor account, for £8,000. Next one, bought goods on credit from B for a cost of £900. So bought goods, this is an expense to the business, and we're going to use the purchases account. So that's going to be a debit to purchases. So if I want to increase my expense account, I would like to debit it. And the fact that the business has bought it on credit from B, that's a liability. So again, credit trade payable or trade creditor of £900 debit here and £900 credit. Next one, sold goods on credit to C. So if the business has sold goods, that's an income for the business, that's revenue. So I'm going to credit revenue. So remember, we said if we want to increase income, we do a credit. So that's for 1,500. And the fact that the business has sold it on credit to C, that's an asset for the business because C now owes the business. That's a credit customer. So I'm going to debit the trade receivables account. Trade receivables are all the customers that owe the business money. Okay. Next one, paid D, a credit supplier, of £300. So D is a credit supplier. So for credit supplier, we use the trade payables account. So that reduces the liability. So I'm going to debit trade payable. So if I want to reduce a liability, I do a debit. And paid D, the fact that the business has paid money, so that's cash leaving the business. So that's a credit. So it reduces my assets for £300. Next one, collected £350 from E, a credit customer. So credit customer, we use the trade receivable account. So if the business has got £350 from a credit customer, that reduces the asset. So that's going to credit trade receivable account for £350 and received cash. Therefore, that increases my asset again. So debit cash of £350. Next one, paid wages and salaries, £3,000. So wages and salaries, that's an expense to the business. So that increases expense. So debit wages and salaries expense for £3,000. And paid, that means cash leaves the business, so credit cash, so that reduces the asset of £3,000. Next one, received rent bill of £700 from landlord, so that's a rent expense. So that's going to debit rent expense, so I'm increasing my expense, so I do a debit, and I credit trade payable. I'm not told whether I've paid the landlord yet or not, so that's still on credit. So that's going to be for £700, £700 on both sides. Next one, we've paid rent of £700 to landlord G. So if the business has paid rent, this means cash leaving the business and trade payables being reduced. So that's going to debit trade payable. So the business does not owe landlord anymore. So £700 on both sides. Next one, paid insurance premium for £90. So insurance premium is an expense. So if I want to increase my expense, I do a debit. So debit insurance premium expense and credit cash. So the business has paid, therefore cash is leaving the business. So that's going to reduce my assets. I do a credit to cash. It's going to be £90, £90. Next one, calculate a depreciation charge for the year on machine for £250. So that is going to increase the depreciation charge. So that's an expense. So debit depreciation charge for 250. And remember, depreciation decreases an asset. So that's going to be a credit to accumulated depreciation account on the machine for £250. Well, I hope this was useful. Thank you for today and see you again. Bye.